What up, boys? ETH
Hey,
Denver tomorrow.
Yeah.
See you guys in Denver for our first ever crypto conference. Oh, speaking of, anyone who's listening, if you'll be at ETH Denver, we'll be there. Alfalfa boys will be there. Maybe we'll gather for a drink, a beverage, a pizza. What do we want to do if we find some
Fumble. I was gonna say look for the rocket hat. I'll be wearing the rocket with the CryptoPunk.
Oh hell yeah.
I like that.
Awesome.
I don't even have my CryptoPunk hat on right now. Anyway,
I need
I'll be wearing
some
one too.
Well, why don't we have Alfalfa swag? That's really what we need.
That's a
We don't
great
have
question.
merch. We don't have merch.
The wheat hat. We need that.
Yeah.
So in the spirit of ETH Denver, which we'll be heading to tomorrow and through the weekend, we had a really foundational episode 8, where we went into Bitcoin, right? And we kind of got really into the fundamentals of why it matters, why it's priced the way that it is, and what this asset really is. And that's what this episode is going to be for Ethereum. And I think that this is going to be one of our most foundational episodes. There's a lot to unpack. And we basically want to take you on the journey of unpacking this topic with us. And I, in particular, Armand, I'm going to play the role of the listener and the question asker, because the through line, if you will, of our conversation today is an article that came out last year. And there's an update to that article by Squish. And Nick is going to kind of give us the synopsis of that article here in a second and why it matters. That's going to be the foundational aspect of our conversation. I could have tried to read all 70 pages last night, but did not, and actually made the conscious decision, like, let me actually play this role today, because I think it could be really important and really helpful to people to have that as well. So before we dive in, we mentioned in the last episode as well, if you're interested in getting in the community aspect of things, to DM us on Twitter. We got a bunch of DMs. One person reached out, said he loves us. We love you back. Thanks for being here. Thanks for listening. So yeah, keep the DMs coming. We're going to build up that list, and still no definitive answer on whether this is a Telegram group or a Discord. But hey, the first step is just to get directly integrated with you guys, and then we'll start working on that.
And heads up, props to Alan Bryce for also reaching out on Twitter. Had some good ideas for the community. So appreciate you hitting us up and chatting up some ideas. We're definitely going to incorporate it into the community at some point. So thanks everyone for reaching out. Keep doing it.
Yeah, that was really good shit. Okay, Nick Talapino, what is this and why does it matter?
Yeah, so let's just do like a quick cover of it, and then we can, anyone, we can choose different pathways. But this guy Squish Chaos on Twitter, his first name is Nikhil. He, in I think this was April of 2021, came out with a price target of Ethereum, an 18-month price target of 150,000, which currently ETH sits at 3,000. So you could think of the order of magnitude he's thinking and why it caught some headlines. And he memed his thesis, the triple halvening. So most people are familiar with Bitcoin's halvening every 4 years. The amount of new Bitcoin that comes out to miners gets issued, cuts in half every 4 years. So he kind of used that halvening idea to express that what is coming up with ETH is the equivalent of a triple halvening, and essentially is what he calls a 90% decrease in the supply. And there's two main catalysts for this. One is one that has already occurred in August, EIP 1559, which turned, instead of ETH being issued 100% to miners, which then sell it to cover their costs for electricity and other things, something like 70% of it gets burned. So what that means, it's equivalent of a stock buyback. When you hear Apple buying shares back of their own company, that's essentially the equivalent for ETH. So we have that EIP 1559, the burn that happens of ETH. All ETH holders benefit from that. And then the merge, which is yet to happen, maybe sometime middle of this year. Hopefully that would be good. And that's when ETH turns from a proof of work protocol, like Bitcoin is with Bitcoin mining using machines and electricity, to a proof of stake. And anyone can become a validator to participate as a validator in the proof of stake network. And with that comes some narrative changes. One of them, he mentions in his summary is the kind of environment angle. ETH will no longer be using electricity to support the network, so we'll have a green angle. But another part of it is that by being part of this validator network, part of the proof of stake network, you will earn a yield. And so I think maybe this is a good place to jump off from the summary a little bit and talk about here shortly. But he updated his thesis. Obviously, ETH is not on track to hit 150,000. I don't think anyone was thinking seriously that it would hit 150,000 in 18 months. But his thesis still remains that we will see a continued decrease in the supply of ETH, specifically on exchanges. And it's a good jumping off point for why we see ETH as money and why we see it as a good asset, and why it could potentially be part of a future retirement plan that we might get into at some episodes in the future. But maybe it would be good to focus on the staking part at some point and talk about when the merge happens and people are staking their ETH now to earn a yield. I think the current yield is something like 4.8%. And so we have an asset that not only can appreciate, but can get a pretty good yield. And after the merge, that yield may go up to something like 25%. So maybe that's a good jumping off point, but that's a summary of, what his thesis was. And he was just giving an update on it. And so it's a good time, especially right before ETH Denver, to kind of, dive into some of our thoughts on why we love ETH.
Yeah. So can I jump off on a couple of things you mentioned there?
Pick any point
fly
of that.
away.
Yeah. Let's just back it way up, right? So when you, the listener, buy a coin, right? You want number to go up, right? So a lot of people maybe don't even understand why prices go up, why prices go down. So at the base level, right? Prices go up because there are more buyers than there are sellers. That's a pretty, easy thing to grasp. But what people need to understand about a lot of cryptocurrencies, if they don't get this, right, that it doesn't exist in a lot of other assets. I mean, it sort of exists to a degree in stock, right, because companies issue new stock, but this is very common in crypto, right? Most, if not all, coins that I can think of off the top of my head are inflationary. So they're constantly creating new coins sort of out of thin air and putting them into the market. Now, why do they do that? Well, a multitude of reasons, right? One reason that Nick touched on is because they need to like Bitcoin and Ethereum need to pay miners, right? The network is secured by miners, and they need to have an incentive to burn their electricity and secure the network. So Bitcoin currently, I think, has inflation of around 2% a year, something like that. And I think ETH used to be around 4.5 or something. ETH has a different monetary policy than Bitcoin. Bitcoin has a fixed monetary policy. It says X number of coins are issued on this block from here to the year 2150 or wherever. Where ETH has always had this sort of minimum necessary issuance policy where the inflation can kind of go up and down as the network decides is optimal, right? So ETH has always been inflationary, and all your favorite shit coins, right? Your Solana, your Avalanches, all of these coins, especially, are really inflationary, because these coins, like Solana, for example, they have very, very cheap fees. So if you're a validator on that network, you can't make enough money just processing transactions to make it worthwhile to sort of run your validator. Right. So the network compensates by issuing tons of coins and giving them as staking rewards, validator rewards. Solana, it's good to note, and Solana and Avalanche, these are proof of stake networks. And Nick, you touched on this as well. So proof of work is like Bitcoin and Ethereum, where you have miners basically running calcs and burning electricity, right? Whereas proof of stake is this different sort of paradigm where validators are basically just putting coins up at risk. And if they do bad things, the network slashes their coins. And that's sort of the incentive. So that is the model that ETH is moving to, hopefully this year. That's the merge. That's the big event that people talk about. So when the merge happens, like all of these inflationary tokens that ETH is just issuing on a daily basis, on a block by block basis to pay the miners, those go away. So right away, like all of these coins that are popping in out of nowhere, right, inflating the supply, which dilutes you as a holder, those all go bye-bye. And it's a huge amount. It's a huge amount of issuance that's just disappearing. So ETH, with the elimination of all these rewards for miners, plus the implementation of EIP 1559, EIP is Ethereum Improvement Proposal. That basically said, as Nick said back in the summer, that we're going to burn gas instead of giving it to miners. So when we combine those two factors together, and you can actually simulate this right now if you go to ultrasound.money, there's like a little switch where you can click simulate merge. And right now, ETH is a 1.6% inflation, which is crazy because it's already lower than Bitcoin, like right now, which is nuts. Like nobody saw that coming like a couple of years ago, right? But if you click simulate merge and like we just go to the merge, we're at negative 2.5%.
Okay,
so every single year, 2.5% is going away.
Deflationary.
Can I just jump in before you ask a question, Armand, if you don't mind? I think another reason this is so important is because with Bitcoin, there's this meme of there'll only ever be 21 million. And that is an easy thing to understand. Mm-hmm. It's the amount of supply is locked. And what we're saying right now is that ETH has a much more complex monetary policy, but essentially it will become deflationary, meaning the number of coins will decrease instead of stay flat. At one point, the amount of coins will say from 120 something million to decrease. And it's tough to understand. There's much more at play. And that's why we think it's really important to explain and for everyone to understand, because I think once everyone understands it, it'll be this much more complex thing to understand, but it'll have a lot more power than say the 21 million Bitcoin ever meme that, and possibly much more powerful and why we think, ETH number will go up. So anyway, I think it's just important to why it's, this is going to get a little complex, but it's important to understand because it could be more powerful than how we understand Bitcoin's monetary policy to be. Sorry, Armand, go ahead.
It's basically the same thing that I wanted to shine a light on. Like I have the same question. It's like, so you're telling me like everybody understands, most people understand this 21 million fixed Bitcoin thing. And then the issuance that's happening, what I'm hearing, Stephen, you're talking about is 2% per year. And yet even with Ethereum on the same system, the same proof of work system is actually, what'd you just say? 1.4% inflation? What was that?
So currently we're at 1.6%.
1.6. So that's just wild for a non-fixed supply coin, right? That like should be inflationary to be below the current level of Bitcoin inflation. And then I think the hardest part for people to like wrap their minds around and really understand, I think even myself at times still like have trouble with it. The deflationary aspect of it is really challenging because the first thing that a person would think is like, well, wait a second, how can there be less than what was already issued? Like I understand that we're going to move from a proof of work system where the reward to people to miners is more Ethereum coins, right? We're going to shift to this other system where the validators receive a reward, right? For like literally staking their ETH, which we're going to unpack the staking. But why then does it become deflationary? Like what there's let's unpack that.
Can we like even simplify it even more and just say like Squish said that ETH price was going to 150K. How do we get there? That's the real question I think we're asking. It's like, why does the number go up so high? What drives it? Steven, you want to answer that?
Yeah. Well, I mean, this is step one of what drives it, right? So the first thing for people to understand is that when you have ETH and ETH becomes deflationary after the switch to proof of stake, right? It means that every single day, every single year, there's less and less and less ETH. Because in order for people to use the network, in order for anybody to do anything on ETH, you have to pay gas, right? And gas is ETH, right? But that gas now just goes bye-bye. It gets vaporized. It gets completely burned. So the more people buy NFTs, the more people use apps, the more people send ETH, the more people do anything. Every time anything happens, ETH gets burned. Awesome. And what happens to an asset that you hold as there becomes less and less and less and less and less and less of it? It gets more valuable, right? So that's step number one of why ETH number go up, right? Is understanding like the burn mechanism. Now let's talk about like the other factors, right? Because you alluded to this a moment ago, Armand, is that when we switch to proof of stake, you are going to be able to, well, you can already stake your ETH now, but it's a little confusing. It's on a different chain. It's on like the test chain, right? The beacon chain. So the merge it has that name because we're squishing the two together. We're merging them into one. So on ETH mainnet, you will now be able to stake your ETH, right? Either by having like the minimum of 32 and like kind of running your own validator, or by going into a pool, like something like a Rocket Pool or Lido are really good options for people. But like exchanges like Coinbase and Kraken, they're all going to be running ETH staking, right?
Yeah.
And what this means, to simplify it, right, is you basically you stake your ETH to the network, you lock it up temporarily, and in exchange for doing so, you get more ETH as a reward. It sounds a little too good to be true.
So it's like
that's what happens.
A CD account with your dollars, like what you used to do when you could actually get a return, right? You would lock up your dollars in a savings account and earn interest.
But now let's go back to the supply and demand, like we were talking about, right? Like what happens when suddenly everybody takes their ETH and locks it up to stake it so that they can get the reward? Now when some hedge fund wants to go on to an exchange like Coinbase to buy ETH, well now the order book has like less ETH on it and less and less and less ETH, and like progressively smaller buy orders move the price up more and more and more and more, right? So the more of an asset goes away, right, or the more of that asset gets locked up and is not liquid supply, the more the more number goes up, the more that demand pushes the price up. And let's again remember that right now, every day there is nonstop, constant selling pressure from miners. Like ETH miners are constantly getting ETH and they're constantly like dumping it. So that all goes bye-bye. Plus, like we have all these people staking, right? So that's point number two. If anybody wants to jump in, feel free. Otherwise,
Well, I think like you have to understand the business model of a miner, right? They're running some machinery to mine ETH, and it costs electricity. So they're constantly having to sell ETH in order to pay for those electricity bills and make their profit. So we have these nodes that are operating the network that are applying sell pressure. And the crazy thing about miners is that they don't even have to hold ETH. You can just run a mining node and not have to hold it. And they're constantly just selling it. So now, not only do we not have that sell pressure, we're actually burning roughly 70% of it. The 30% goes to the stakers, but those stakers are locking up a good amount of their ETH, a good amount of the network. Currently, it's at 8% of total supply is locked up. And so I think it's important to note that not only is it not getting sold, but the people who are receiving it are locking it up and not using it. So just like Steven said, there's less supply when say someone wants to make a big buy or like institutions. Right now, the yield on that, and Armand, you mentioned a CD. And so I think it's important to talk about what that means in ETH terms. I think it's really powerful that if you can assume that 5-10 years down the road that ETH will be this transaction layer for the new internet, if you will, all these applications, it will be a settlement layer for Web3. And even if it only doesn't have the full market share, 100%, it still has a significant majority of the market share. You are essentially owning a bond, an internet bond on that transaction layer. And right now, before the merge, it currently pays 4.8%, which is pretty darn good yield. It's not going to keep up with inflation right now, but at least it's an appreciating asset. And I think we're projected, once the merge actually happens, that, and this is something maybe we could debate a little bit, but that yield for staking your ETH may go up to something like 20 or 25% annually on your ETH. So I don't know.
Temporarily likely.
Right. But why
we
will
could
it be
see
temporary?
that for a little bit.
Because, and then this is where the power comes, that will temporarily stay high and it'll go down. But isn't that, it will go down because more people will stake. If there's a 25% yield, won't more people dump in there and become a validator? And so wouldn't that cause either more buying of ETH, or people with ETH, instead of having it out on an exchange and trading it or buying NFTs with it, be incentivized to then lock up their ETH. And so we have 8% of the network locked up now. We could potentially see that grow a few, multiply maybe, because who doesn't want, a 25% yield? So that yield will go down because of buy and demand pressure.
Nick, I want to go back to one thing you said.
I found the actual staking yields if you want to see the most recent estimates.
Maybe
Justin
nail
Drake
the
puts
stats
them out
and then
on.
go to Armand.
Yeah, Justin Drake put them out on January 8th. He's estimating 9 to 12 and 12.6%, like median of 10.7%, which is really high, right? 10%, 7.7% on an asset is pretty nutty. We could talk about the way like a fund might tackle that in a bit if you want. I know you wanted to jump in with something, Armand.
Just the detail there, I think, is really important because we're talking about a certain amount of ETH being staked now that has the ability to unlock and unstake. And I know this is like an often debated point. Like really, there's multiple levers there and multiple reasons why there could be more staking that happens. The higher amount of ETH that you can earn, like the fact that you just might generally want to, get out of NFTs and get that 20%. But there's also a lot that is currently locked up, right? So all these things are going to happen all at the same time in this merge, right?
Right. So there's, if you lock your ETH now, it is locked in there until the merge happens, at which you can unlock it. And the protocol has issued some rewards to incentivize people to lock their ETH. And that's what they're receiving now. New issuance to incentivize that lockup period. And when the merge happens, those people who've been locking up, some of them for, I think over a year, will have a chance to become liquid again. But so that may happen, right? And that will likely happen, those portions. But there's these services that Steven mentioned, Rocket Pool, Lido, they are pooling a bunch of ETH together, and they're actually giving a token in exchange for locking up your ETH in their community pool. They're giving you, like Lido gives you ST ETH, staked ETH, and that is liquid. And so you essentially, these services have been giving people the ability to move in and out of those staking pools. So I don't know what percentage of the current staked ETH.
Yeah. Is that what you're saying? Yeah.
Yeah. That is actually, I guess practically and functionally liquid because you can kind of move in and out of these pools and sell your staked ETH. So I don't know if it's going to be this massive unlocking and sell pressure, but there will certainly be some, and it just won't be as big because but it won't be as big because these services are providing people liquidity.
The assumption is more people will be staking after the merge than before. Like,
listen, we see it in DeFi now, but we see it in any asset class when there are yields. Like let's say it is 10%, the money goes there. Like Steven has mentioned, and we've mentioned different layer ones like Phantom or AVAX. A lot of times why they have so much total value locked money on their protocols because there are significant yields to be had in DeFi. Sometimes 20% plus, even on like Terra, for example. So money follows the yield, and I think we'll see that be the case once the merge happens. I know I'm interested in it, and definitely want to capture that yield, and we'll see how fast the money moves in. But I think traditional finance, I think this will start to make the mainstream headway when you hear of a crypto asset that natively gives you 10%. Not you have to use some obscure DeFi protocol, but it's native to the protocol to get those kind of yields. I think a whole new narrative will develop, and that'll be definitely a bull narrative for ETH. And I'm excited to see that pop up on CNBC and Bloomberg. Probably a month or two after the merge. Once things catch on.
Great point.
Yeah.
That's a good point. They definitely will be quoting that ETH yield, I think.
Yeah.
What's important to realize about it too is that funds can actually capture that yield without taking on the risk of ETH, right? Because you can borrow ETH like very cheaply, and you can often short ETH via like a perp and get paid to do so, right? So if you're a fund and you see 10% yield on ETH, well, you can put on a trade that looks like this. You could buy $100 million of ETH, and then you could then put on a short of $100 million of ETH using a perp on an exchange, right? And you could do so using leverage, so you only have to put like 10 million of capital into it, right? you now have a neutral position, right? If ETH goes up, then one of your portfolios goes up, the other goes down, and vice versa, right? But you can now stake that 100 million of ETH and make a risk-free 10% on it. And you may even be getting paid like 5 or 10% on the short, right? In bull markets, you often can get paid like 15, 20% to be short ETH. So what that's going to mean is like a fund may be able to go in and make like 35, 40% on this trade being delta neutral, like without taking price risk. And what's that going to do? It's going to cause like a lot of money from the real meat space world, right? Where people are getting 0% real yields in bonds. And they're going to be like, wait, we can get like 25, 30% in crypto on like the second most premium asset in crypto. And then you could have like just billions of dollars really coming in to buy ETH. They have to buy ETH to put on the trade. And when they buy the ETH, well, number goes up again, right? So reason number 5 why ETH number go up.
Wow.
Now we hit at
Like-
2 points, correct?
Yeah.
And there's a third point to unpack. I mean, feel free to unpack that more if there's layers within that are important. But
I just think, Stephen, you made me think about looks, and we've been talking about the looks trade a little bit and how it has ETH rewards. I think the current rewards are like 120% annually you earn an ETH on your looks this is for Looks Rare, the OpenSea competitor.
I think it was,
and I
it
saw
was 250 today when I looked, when you looks
it
plus
got back up.
plus ETH. Yeah.
Oh, I see.
It
So
was like
a lot of
160
people,
in ETH. Yeah.
there's precedent for what Steven's saying. So a lot of people applied that same type of trade to Looks. So they bought Looks and then went short Looks at the same time. So they had a neutral trade whether Looks went up or down, and then took the reward. So this is like, there's precedence for this in crypto, and there's certainly precedence for this in traditional finance. So I think, how does a listener take advantage of that? One, own ETH, but I think these institutions may productize that. Yeah, own ETH, but also maybe we'll see some institutionalists productize that, where you put your money in a vehicle and it is long and short ETH, but you get your yield on top of it. So hopefully there'll be something a lot more simpler that we can all use instead of having to.
There are already protocols that are coming out that basically just do a basis trade automatically.
What's that
for you?
Basis trade?
It's a trade similar to what I'm talking about, where you create a neutral position, right? So imagine like there's a perp contract on an exchange like FTX. A perp contract is basically like a derivative, right? It's not like you're actually buying or selling ETH, but you have exposure to it. So you often end up in a situation where the longs have to pay the people who are short like tons of interest to get, because the trade has to be balanced. You need the same people long as short. So you sometimes end up in a position where you have to pay like 40% APR to be long ETH via perp. And people are willing to do it because they're leveraged and they're making a lot of money. But that means somebody who takes the other side of that trade can basically get paid 40% to be short ETH. But if they don't want to be short ETH, they could simply buy an equivalent amount of ETH in the open market. And now they have a neutral position, right? And they're earning just 40% on their short position without having to take on any risk of price movement, right? So we're now having protocols coming out that are actually like kind of automating this process. You just sort of like stake tokens into the protocol and you just earn that yield. And this is there's a lot of cool stuff like this in DeFi coming out. I mean, we've seen a lot of it with options, right? Like DopeX has been like a huge project on Arbitrum, an ETH layer 2. And as layer 2s roll out, we're going to see more and more of this. And the layer 2 thing is actually like another reason why we're going to start seeing more ETH demand. Like we're finally this year, I think, going to see like a real explosion in ETH layer 2s, which are these protocols built on top of ETH that are secured by the Ethereum network, as opposed to a protocol like a side chain like AVAX, which is sort of like more like adjacent to it. It's not necessarily secured by ETH. So with layer 2s like Arbitrum, like Optimism, like ZK Sync, right? All these things are rolling out, and we're having the bridges kind of built from the exchanges to them, which is like the big thing, right? Like once people can cash out to and from Arbitrum from Coinbase, like we're going to see tons more money flow into layer twos. And this is big because there's all this money on the sideline right now that is either not involved or they're using like Luna or Solana or AVAX because like they can't use ETH. It's just too expensive, right? So layer twos make gas fees like close to nothing once more adoption happens. And all the activity for the layer twos eventually has to settle on ETH, which burns more ETH and just drives more demand for ETH and again pushes number higher.
Okay,
I'm kind of expecting mid this year, end of this
Steven.
year.
So like these are all reasons, okay, number go up, but a lot of people sitting here on the sideline are going like, well, cool story, guys. Like I love the bullish takes, but like what's going on? Like why is the thesis not playing out? Like why is Ethereum still at $3,000? Like great, it's all cool, 70-page article. You guys think this is like why we should be bullish, but parts of all these reasons are half baked and some of them are fully baked. And like EIP 1559 already happened. It didn't do what people are saying it should have done, make number go up. So how do you respond to that? I think the average retail investor is thinking that.
Right. I think EIP 1559 has happened, and it did what it was supposed to do, which was instead of giving all the gas fees to miners, it burned a majority of it. So it set the stage for the merge to happen. I think where the narratives kind of get messed up, and this is where Squish mentions in his update, is that ETH is slow to scale, is slow to implement the merge, and it allowed a hole for these alt layer ones, which have faster throughput speeds. They're certainly lower cost to use, faster to use. I think allowed them to gain market share, and so that's what the narrative we've seen play out over the last 9 months, 12 months, and so that has certainly happened. And I don't think it's necessarily was unexpected. I think because the delay in the merge, that narrative has come about and played out, and the ETH has lost market share. I think it's something important for people to understand that ETH as a protocol is actually decentralized. There are multiple client teams that have to work on ETH to make a change. And, when you look at like Solana, for example, it is not a decentralized team updating code. So yes, they can move faster. They can make changes faster. But if we believe that decentralization is one of the reasons we're here in the first place, then while it will take longer for ETH to catch up, once the merge does happen, it'll be an order of magnitude further along, than these alt layer ones. And if you play it out, if these alt layer ones do, grow in a massive level of transaction volume, like where ETH is now, they will eventually face the same difficulties and same issues that ETH has faced for the last year. And they will have to, make a decision. Do they come like in a Ethereum virtual machine roll up, or do they kind of implement their own layer one, layer two system to, handle those difficulties that they will inevitably face? So while it seems that the alt layer ones are taking a lead in the short term race, they certainly are. I think they're actually quite a leg behind in the long term race. Now, if you're just trading to make money, the play was right to bet on these alt layer ones in a short term trade. That certainly, I think that was right, and that certainly played out. But when we're talking about maybe a decade long play, a 5 to 10 year play for, a potential, 50x return, I think the ETH thesis still remains, and it's just going to take time for it to play out. And I think there's some execution risk played in, like, will they actually pull it off? It's been postponed, several times. So maybe there's some execution risk played off. But I also think for the same reason that the group of four of us still have to like discuss this topic amongst us to understand it, is the reason that the narrative hasn't played out, because it is difficult. It is complex to understand and fully appreciate the order of magnitude of impact it will have on the asset. So I just think, people have to see it to believe it. And once the yields happen, once the supply decreases, then it'll become part of the narrative, not before.
Yeah, I think what you said about the hiccup with gas last year is like critical, right? Like we had the first part roll out in the summer with EIP 1559, and then it didn't matter because people couldn't use ETH. It was just too expensive. So we saw like the amount of ETH kind of locked in DeFi, right? You could pull up a chart of that flatlined. It even went down a little bit, and all that demand went elsewhere. And this is why what I'm talking about, Armand, with like the rollout of layer twos this year is so important, because people are going to be able to get the same experience they get on Solana, which is to do things like very quickly and very cheaply, you know, maybe not as cheaply as Solana yet, but that will come. That's going to bring all these users back to ETH. That's going to bring all this demand back to ETH, because demand for L2s is demand ultimately for ETH. And that is going to put upward pressure on the price. I am like sort of unsure of what's going to happen in like the short run, right? Like I do think there's like a good argument to be made that if these L2s are really successful, they may sort of like offload so much demand from like the main net that like actually like we burn less ETH paradoxically, which actually is less bullish for the price in the short run. But in the long run, like if we're looking 5-10 years down the road, ultimately that speed and that like low cost of execution is going to bring tons of demand onto these layer twos, and it's going to probably be someday like impossible to use mainnet. Like using mainnet's going to be only something that like Visa or MasterCard does, right? It may cost like $500 just to send somebody like $100 worth of ETH. It wouldn't even be worth doing it. We're all just going to sort of like live on these layer twos, you know?
Can I do a fun experiment? Eric,
Yes.
I'd like to have a sidebar with you, Eric. So I just listened to all that, and I understand it. And I can pretty much tell you that and even though I understand it, I'm confused. And I can tell you that 95% of people listening are confused. So I would
let's unconfuse you.
Yeah. So I would like the kind of like, we just heard a lot of interesting, fascinating technical reasons why number go up. I would love if you and I could just have a quick sidebar, help me make sense of all of that, not only on my own behalf, but on behalf of the listener.
Yeah, thanks. Let me try to wrap it up for us, like in a nice little package. And at least this is the way that like a traditional finance mind or like a CFA brain looks at the investing world. And maybe this will help you too. So I think typically we look at the world in terms of like technical analysis and fundamental analysis. Okay, technical analysis means like you're looking at price action to determine future price action. And then fundamental analysis is saying that like an asset's going to trade at the value of its future cash flows. Okay. What we're talking about here, and what Squish Chaos was actually talking about in his report saying that ETH price is going to go to 150K, he's actually looking at something completely different. He's looking at supply and demand of like traders, the flow of funds. And this is like a third category that I'd label under like special situation. This is actually more akin to what we saw with GameStop. So when you're trying to predict the price of GameStop, you're not actually looking at the value of the business. You're not looking at the technicals, meaning the chart. What you're actually doing is trying to determine, like, based off of how many shares are available to sell versus who's going to buy it, right? And if everybody's buying it and nobody's selling it, well, then the price is going to go higher. And how do you actually like pinpoint an actual price on that? It's hard. So Squish put out 150K as his like supply demand balance. Where I land on it, who knows? I think like where I would like to start is actually looking at the fundamentals. And, we talked about Ryan Alice, a guy named Ryan Alice, going on Bankless recently. And he was talking about the discounted cash flow valuation of ETH being somewhere between, I don't remember, if 12 and 20K. And, we've heard a lot of people quote like that range based on the cash flows. I think Steven brought up a good point. It's like, how do you value the cash flows of something that's paid in its native currency? That's another problem. I think if you just zoom out from that, you would just look at the yield itself. If you can capture like a 7 or 20% yield on something that has value in itself. So like enough value to like make people want to buy it. So now we're talking about the supply and demand again. I think it's important to note that like we're not necessarily talking about the intrinsic value of this asset right now. We're talking about where the price could go. It's almost like we're talking about the squeezability of it. So like when we're talking about 150K that Squish quoted, He's talking about like, where could this thing squeeze to if enough ETH is staked, if enough ETH is locked in DeFi, if enough ETH is burned, the supply is going to be so constricted to the point where buyers are going to be fighting over the available ETH to trade, where it could like moon in a squeeze scenario. And that's completely different than like the way a traditional finance guy would probably look at something to be like, well, what's the inherent value or the intrinsic value of this asset?
Yeah, which that's so beautiful. And by the way, I wasn't giving you guys a hard time. I just kind of wanted to give you guys a hard time. Actually, I was giving you guys a hard time. So Eric, when we were at Board and Brew, you said something that was really similar to that. And I think it's also really important to mention, like you were talking about this idea of like investing as a whole in assets in the stock market, normal retail investor, value investor, trying to apply these different methodologies of how you analyze these assets doesn't, like, everyone's trying to figure this out. Can you like also integrate that into what you just said?
I think it's hard to like keep a universal view on all this stuff. I think what we mentioned before, it does matter. It doesn't matter if it's technical analysis or fundamental or whatever. At the end of the day, we care about price. You know, that's what an investor cares about. They care that their dollars go in and go higher. I think with ETH, what everything that Stephen and Nick and you said earlier is going to push the price of ETH higher. And I think a simple framework of looking at that is to say like, okay, so what's the supply and demand dynamic right now? And let's hold the demand steady. Let's just assume the demand doesn't go higher. Well, supply is going down. You guys mentioned all the reasons why supply is going down. So that ceteris paribus means the price is going higher. But then I think if you even like look at demand, you could say demand is also going higher, which is going to even shoot price. It's going to be even like a driver for price to increase even more. And you know, I have some numbers to back that up. You know, like we've talked about supply at length, but I could talk about the demand. You know, the demand right now, 42% of all ETH burn is based off of NFTs. NFTs is such a nascent use case. It's like a brand new baby. It's like a little newborn. That's what we're like basing all of our ETH demand off of right now. And NFTs are mostly just profile pictures today. But like as we evolve and like, you know, I think 26% of ETH burned is off DeFi. DeFi can even expand. Like the demand for ETH is also going to rise, in my opinion, just because you're seeing like how much demand there is just for freaking profile pictures. So like if you take supply down and demand up, of course price is going to go higher.
Okay. That's awesome.
And for the X factor of like, this is a new technology. You know, I don't think anyone saw the NFT bull run that happened last year. There could be, you know, this new thing that we haven't thought of that, you know, will be another application based on Ethereum that will drive block space demand even higher. I think that's one thing we all agree upon, that one of the biggest products of the next 5 years will be block space. That will be the most in-demand product of the next 5 years. NFTs will be a part of it. DeFi will certainly be a part of it, but there will also be new and innovative things that get developed from it that will increase the block space demand, just like NFTs came out of nowhere last year.
So, Stephen, I have a question for you. I mean, you know, I know that you just mentioned the timing aspect of this is hard and you're kind of unsure about the next 6 months, but you know, if you're talking to a friend who's just a normal crypto retail investor and they have a stash of cash that they want to inject, and you're obviously a professional at this, how would you recommend that they time that? Like, is this something that, because I know a lot of people, including some people we know, are currently taking like chips off the table, like they're selling ETH right now. So I know it depends on a multitude of factors and it depends on the person and their risk tolerance and everything. But if they wanted to play this squish scenario out, if all these pressures were going to come to fruition, does it make sense to just get in now or kind of wait on the sidelines a little bit? Like how to make this practical, I guess.
It's like a popular question that people ask all the time. Generally, 99.9% of people shouldn't be trying to time the market. That being said, if you have like a really long investment time horizon, I think there are metrics you can look at that, while not really predictive for the next 6 months, are pretty predictive, on like a multi-year and certainly multi-decade time horizon, which should be people's horizon for an asset like ETH, because it's so volatile, right? Like you can see this thing go down 60%. It's probably, I don't know, I haven't checked the charts, but it's probably gone down 60% twice this year, like already at one point, right? So if you're holding in the short term and that's your mindset, you can just so easily get wrecked, right? So you got to think like this is a 5-year hold, like at minimum, right? And then the question becomes like, okay, so on like longer horizons, like what does price look like? And right now, we've obviously rallied up a little bit, and there's a lot of macro uncertainty in the world. There is, right? I don't deny any of that. But when I look at ETH on like a longer time horizon, it does feel fundamentally undervalued to me. Like I would totally agree that it's worth at least 10 or 12K. And it's not hard to like put together like reasonable models that say like the price should be 20 or 30K, right? And that doesn't mean the price can't go to like $800 this year, because it certainly can, right? But it does mean that even if you buy it right now when there is some risk, right? You are buying an asset that over a long time horizon is just massively undervalued by the market, right? And if you don't own any, you should probably just buy some now. Maybe don't buy all of it now, because it can feel good to have some cash, right? So that you can just always buy whenever it dips, and it feels better, right? When you're all in and it dips, you feel helpless. It's not a great feeling,
But this is a common thing I hear in general, like ETH being undervalued, right? And
well, it is. It's so undervalued in my opinion.
I mean, you
That's why
guys say that. You guys agree with that as well, right?
Yeah, absolutely. I mean, that's why we hold it, and why I cry every time I buy an NFT, even though I celebrate, the hopeful eventual ROI that the NFT will create. I cry a little inside, because I also know that, it's costing me opportunity cost of this long-term play that, I have, and I am, foregoing that for, whatever NFT play we're going with. So I cry a little inside every time I buy an NFT, and then I text you guys in the thread, help, I need help. I have an addiction, maybe.
It's hard. Armand, ETH is the biggest part of my portfolio for all the reasons that we've been talking about thus far. But I did sell some recently,
Right,
in an effort to trade it, because I just see so many macro headwinds. I took some off the table, but it's only because I want to be able to buy more on any dip, like Steven said, like have some cash ready to deploy if things get bad. And it looks kind of like things are getting bad globally, like macro. It looks like things are getting pretty bad. So I just want to be prepared for like that one scenario where it gets real ugly. But I'm so long ETH. I'm so happy and comfortable just like holding my ETH long term.
yeah, I'm really.
I just want to add one more caveat to what you said there too. It's that like, although everything looks bad right now, and it definitely looks bad, when it's the bottom, like nobody ever knows it's the bottom. Like it always looks like it's going to get worse when it's the bottom. Otherwise, everybody would have like front run the bottom and it wouldn't have gone that low, right? So anytime you're buying and it's like really, 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 really painful, right? It's really, really, really painful often because it's close to the bottom. Like if it feels safe to everybody and everybody knows it's the bottom, it's probably not the bottom, right? And that's not to say that we definitely hit the bottom because everybody was fearful. Like that doesn't mean it can't go lower, but like it's just this weird psychological thing when you're in markets. Like it never feels good to buy when it's at the bottom, right? So we're all sitting here saying like, oh, it feels pretty bad looking for the rest of the year. I mean, that could be true, but it also could be a sign that like maybe the worst has passed. Maybe things have been priced in. Maybe the year won't unfold in a fashion that's as bad as the market was, right? While I don't think that that's the case, I'm very open to that possibility. And a long-term investor should just not even care about that at all, because like on long time horizons, ETH is, in my opinion, like very undervalued right here. So you should buy it. And if it goes down, you should buy some more. If you can afford to lose the money, of course.
Yeah, I think we keep saying on a long-term time horizon, and we've been talking about these big price targets. I think it's important to talk about when we see these big price targets like 150,000 ETH or $1 million Bitcoin. You have to take into account, and this is actually good to think about whenever you see any coin for that matter, and look at the price target or price that people are forecasting. You might see in Discord or Twitter, people throwing out random numbers. You have to look at the market cap, and the market cap is a better, I think, marker for if this is possible. So, to hit $150,000 ETH, I think we're looking at close to just under a $20 trillion market cap for ETH. And right now we're something like 300 or 400 million. So it's a 20x leap to billion. Billion. Oh, did I say million? Oh, billion. Yeah. Sorry. 340 billion. So we'd have to give to a $20 trillion ETH market cap. Just to put things in perspective, the total crypto asset class, including Bitcoin, ETH, all the shit coins, the total market cap for all of crypto is just around $2 trillion. So, and for Bitcoin to hit $1 million per coin, that's also, just under a $20 trillion market cap. And for those keeping score, that would mean a flippening if those, hit those prices or are near flippening. But what that means is that the whole asset class has to go from 2 trillion to say 50 trillion. And what that will take is time. Narratives have to play out, fundamentals have to be executed, and money has to flow in. And it won't happen immediately. It will happen over, 5, 10, 20 years. And the whole asset class needs to see money flow in. And so when we say long-term time horizon, it's important to understand why, just because a lot of money has to flow in over time. And we think it will. We think that is almost inevitable, that the whole asset market class will increase. But it's going to take some time to actually see it play out.
Beautiful.
I like what you did there, Nick. And I just want to add to it. Like Nick was talking about perspective, like keeping a wider perspective on the market cap of ETH. Okay. So at like 350 billion today, or whatever the quote is right now, it's about the same as the market cap for Home Depot, the company. So it's like important to note that like it's so early that we're talking about a network here that like could be the next iteration of the internet, all encompassing, sort of like a global computer, and it's worth the same amount as Home Depot.
Yeah, I mean, it's like we're in the 90s right now, and we're trying to like wonder what the total market cap of the internet will be. And like, it's really hard to fully appreciate what that turned into. I mean, we always joke around some of those old articles we talk about when people are forecasting the internet, and they were very undervalued in their prospects for the internet in that time. So it is really hard to contemplate that, this could be a $50 trillion market class, but when you're talking about a global settlement layer for, what could be a new internet, the cool thing is that you actually get a chance to own a piece of that. Where in the previous iteration, we all didn't get a chance to own that. So it's hard to forecast now, but yeah,
it's already a good trade. Owning ETH is already a good trade, like just for long term. And now after the merge, tack on a 20% yield on top of just holding it. Like it could be the best trade of our lives. Like it could be the best investment of our lifetime. And that's what I'm that's my base thesis that's why I'm putting
more than
the majority
Bitcoin?
of my wealth there.
Like,
and Bitcoin too.
But if you had to choose, like, when you think of the best trade of all time?
I prefer ETH personally. I was thinking about this today, actually, because I knew we were going to talk about this, but the three of you guys got into crypto well before me, and you got Bitcoin earlier than I did. So I don't have this same affinity to like the king of the jungle, like the Bitcoin. To me, like when I got in, it was like, I got in because of DeFi. So like I saw everything happen on ETH. So to me, ETH is like my king of the jungle. And like, I still hold Bitcoin because I do see it's the narrative for owning that independent of ETH. But like for me, it's ETH.
And the same thing is applying with each of these that's why the Avalanche community is being labeled a little aggressive nut job level. It's the same thing. They
Am I,
want to win. They want to be the king. Yes.
Am I the most pro Bitcoin person here?
I would
think I
I
might
would
be,
also
actually.
put myself up there, but you're probably even more. But
I think I actually hold
think
a
I'd put-
higher percentage of my portfolio.
All right, never mind.
Bitcoin.
He's
I
the
think I have a
most- he's the
boomer.
most
I think I have a
pro-Bitcoin
boomer
person.
portfolio of like, Bitcoin, ETH, and then NFTs and ETH derivatives.
You really
Yeah.
have to ask yourself, guys, are you going to make it? Are you going to make it holding on that Bitcoin?
I mean, if my actions had to speak louder than words, like my actions show, I have more ETH now. So, yeah.
Oh,
I think it's a very interesting discussion to have that we should
Well, by the way,
probably
only
talk about
because
someday in a
I keep
different
buying
episode.
NFTs. The NFTs are responsible for this, which I throw in that bucket. So
Like NFTs are an interesting thing to tie into our ETH bull case, because I don't know, like what we've been talking about is a platform for smart contracts, a layer for smart contracts to happen where applications will be built on. DeFi is one, NFTs are one, but NFTs have this like cultural significance, I think, which is important, because they weave in art, they will eventually weave in music, and how people choose to show off their identity. And there will be its own applications, but having ETH as the money for culture or a cultural asset is also somewhat important. ETH is the currency of NFTs. And so I think there's, I don't know what value you assign to that, but there is this kind of extra value that I think it deserves for being the currency of NFTs and maybe broader and in the future, just, culture in general.
Yeah, you reminded me of a good point that I think is worth considering, because we were talking about Bitcoin versus Ethereum, and I think a lot of Bitcoiners will say, and probably rightfully so, in my opinion, that like Bitcoin is truly money and ETH is not. And they'll also say other things like, well, there's no need for decentralization for NFTs. There's no need for like DeFi isn't truly there's all these things. And I think on some level they're absolutely correct, right? But like the market has also clearly spoken. Like people clearly do want NFTs. People clearly do want to play around with all this stuff. And Bitcoin doesn't serve it currently. So as much as you want to be on your little, Bitcoin high horse, right? And holier than thou, and this is the way it should be. Like Ethereum is sort of just a bet on the way the world is and how humans are and how they actually are behaving. And if humans behave in this way and continue to want to do these things, well, they're going to trade NFTs. They're going to play games, right? In the metaverse or do other metaverse things, however you define it, whether or not that's legitimate and Web3 is a real thing. It almost doesn't even matter because people are doing it. They're going to do it. It's going to drive demand for ETH. And the price is going to go up. So for a lot of people, it's like, do you want to make money or do you want to be like overly ideological to like a fault, right? And I'm not even saying what the Bitcoiners say is totally wrong, but like I want to make money, and I think that these things clearly are happening and will continue to happen.
I got a question about that. So when you brought up that point, you made me think of Michael Saylor, right? Michael Saylor is the CEO of MicroStrategy. They became popular because it was the first public company to announce they moved their treasury, the cash that they hold in the bank account, into Bitcoin. And I think that's their main treasury asset now, is they hold Bitcoin. They view it safer than the US dollar. And one of his arguments when people ask him, well, why aren't you also buying ETH? And I think his point is simply that as a CEO of a publicly traded company, it's the only one he feels that he can legally and safely buy as a publicly traded company. So do we think that will, hold up our thesis a little bit until there's some more regulatory clarity of if a public company or an institution can actually hold it? Or is that only the case you make for, a store of value play? Maybe the public companies only want to hold a store of value asset and Bitcoin fits that better, but they will find ways to own ETH as the global settlement layer for, Web3, or what we often refer to as Web3.
I mean, I think there absolutely are like enormous risks still with Ethereum. I think Ethereum has the least regulatory risk of all the other coins, because I believe the SEC has said in the past that ETH and Bitcoin are both not securities, but I don't think any other coin can really even like truthfully make that claim with a straight face, right? And there are like other like enormous risks with ETH that we don't know about, right? There's all these black swans lurking in DeFi with stable coins. Like there's a lot of stuff that could happen that could trigger like an unbelievable implosion at some point. Like we have to approach that with open eyes. I mean, it's one of the reasons I still hold a lot of Bitcoin, is because Bitcoin is much more certain. There's way fewer unanswered questions, right? It also means the upside is less, right? You're taking on a lot more speculative risk, right? You get paid to take on that risk with ETH, but like you would be a fool to like ignore that. And I think people who are just buying these coins, should educate themselves on like all the little monsters that are lurking underneath, both from like a regulatory perspective and in just like the sort of structural ways that these ecosystems are currently being built, with like hidden leverage and smart contract risk and all these things that can kind of unwind in like a nasty way. And that's not to say that we won't ever recover from it. I think we still will, because like it's just too great of a thing to just go away. And there's clearly too much of a product market fit. But yeah, like you could absolutely get wrecked. And I totally get a guy like Saylor with like a big company not wanting to put billions of dollars in ETH right now and going into a coma for 20 years. It makes sense.
I think it's his thing is more as a regulatory risk than like the risk of price going down. But there is, just like there is a Bitcoin trust, GBTC, a publicly traded security which you can invest in without going into it too much. It's essentially a trust that actually holds real Bitcoin, and you're buying shares in that trust, and they tend to trade at premiums or discounts to the actual value in that of that Bitcoin that trust holds. But there isn't an Ethereum equivalent. The ticker symbol is ETHE, and it's a grayscale Ethereum trust. And I was looking up while Steve was talking, looking up the top holders, and it is ARK Investment Management, which just so happened to put out a research report, I think last week, that reiterated similar price targets. They put ETH at a $180,000 price target by 2030 and Bitcoin of $1 million price target by 2030. So, I guess maybe answer the question, but there is a way for some of these public institutions to play it, even though it's not directly in the asset itself. There is ways for them to hold some ETH in there.
You didn't see Scope Wealth Management on that list? As,
let me see. Yeah,
because for our TradFi
I can't scroll
clients,
far enough.
Number
Sorry.
3.
I'm allocating. I had a question actually, which is related to all this. So, really, like, Bitcoin is probably the best store of value ever created. Okay, like I think we could probably all agree on that. But then there's this like meme about Ethereum or Ether being a triple point asset, where it's like this capital asset that generates cash flow based off transactions, like 100 times more than Bitcoin. I think Bitcoin's 1% of the transaction dollar amount of ETH, and then it's going to have this yield coming up after the merge. So it's clearly like a capital asset, and I think it's probably more of a security than not going forward. But it can also be a store of value with its like deflationary monetary policy. And Bitcoin trades, like the value of Bitcoin or the price of Bitcoin is entirely based on this like monetary premium that is ascribed to its store of value properties, similar to the way that gold is. Like gold is a $10 trillion asset with like maybe 1 trillion worth of like industrial use case. So it's like its monetary premium is like a 10x multiple on gold. Bitcoin's is higher. It doesn't really have an industrial use case, it's purely store value. But like, should ETH get any monetary premium? And if it does, how do you incorporate that into an ETH valuation? Similar to the way that like Squish was looking at the price of ETH, like would you aggregate these things to be like, oh, so the capital asset value of ETH would be X, and then the store of value monetary premium of ETH would be Y. You add those together, and then there's like this utility value, which is like it's like this fuel to buy NFTs and transact in DeFi, which was like the third point of the triple point asset. But like, that's my question is really about like the monetary premium store of value comparing to Bitcoin, and like, would ETH get ascribed any of this monetary premium that we are ascribing to things like gold and Bitcoin? And for something that is like, has a pretty strong, like monetary policy as well.
I'm just trying to like, picture the CNBC like clip in the future for that to be true. And it's basically like Joe Kiernan on CNBC asking Michael Saylor, being like, well, sure, Bitcoin only has 21 million Bitcoins, but Ethereum is deflationary. It decreases in supply. And I think once that narrative happens, maybe it will get a monetary premium like that. But I think once we see that question, maybe the hooks will be in for the narrative and for the larger investment class to appreciate that maybe. But one reason that Bitcoin has that is because that's its only game in town. It's kind of a one-trick pony, and it's a really good one-trick pony. But I think while ETH has this yield and this economic activity and application use case, I don't know if that will be its claim to fame and if it'll actually play out. Just because.
Okay, Stephen, I know you want to jump in on that one, but I do want to do a follow-up, and that's like, does it matter if ETH is a security versus a commodity? Let's say that Bitcoin is a pure commodity that's just like gold or whatever, and ETH gets deemed a security. Like, does that actually affect the fundamentals and affect the value of ETH in the way that people use it?
I mean, I don't think ETH will get declared a security. I could be wrong on that. I don't think I also don't necessarily think it would be like a death knell for it either, even if it happened in some weird scenario. Like, it's already just so widely adopted and used, and basically like impossible to really shut down, right? Like, if you wanted to shut down Solana, like, wouldn't it be that hard to like track down Anatoly and like a couple of validators and just be like, stop, right? But you can't shut down ETH. It's like the cat's out of the bag there. Like, you could even I know like people try to make arguments that regulation is good in some circumstances, and it probably is in a lot of circumstances if you want to make number go up. Although there is like a healthy debate about the degree to which people are sort of like selling their souls down the road to make number go up in the short run. Like, if we let these things, if we let Bitcoin and Ethereum kind of like be, corrupted by the the claws of government and the like banks and whatever other existing kind of like corrupt institutions we have. But it's honestly not something I really worry about a lot with ETH. The bigger threat is stuff on ETH being classified as securities, right? And then the ripple effects on ETH itself, the threat of stablecoin regulation, or if that's, especially if that's done poorly, like, those to me are like the large regulatory threats with ETH, if that makes sense.
I think in the case where you're talking about, if we're speaking about monetary premium, like as a store of value, for public companies to hold it in their treasury, it has to clearly not be a security. For that one use case that we're talking about, or case in the bull case for Ethereum, Apple can't hold it in its treasury. So until that's clarified, I don't think you'll see any public companies or hold it in their treasury. But to invest in ETH, the platform, and to be a participant in the network, to build applications on it, for sovereign wealth funds to hold it, for private funds to hold it, for large, high net worth individuals to hold it, I don't think that matters at all. But in that slim case of public companies holding it, you obviously can't have it be a security. I think as part of their main treasury asset, like fiat dollars, Bitcoin, and Ethereum, it would have to be labeled pretty clear. Doesn't mean they couldn't invest in it. Like Apple has, on their balance sheet, a line item marketable assets, and they invest in stocks and other things. And that could certainly be part of the balance sheet, but maybe not part of like cash and stuff like that, I think. So I think we're still okay. And I think Steven's point of the applications and coins on Ethereum is maybe the bigger risk to the narrative. If we look at DeFi, if DeFi gets regulated a little bit and the coins and applications on there get a little slapped down in the short term because of regulation, then maybe that is a narrative against Ethereum that we could face, a headwind that we could face in the short term. But another narrative that could be a tailwind, I think we mentioned it briefly at the top, was the whole climate change narrative. As soon as ETH moves to proof of stake, there won't be these machines consuming electricity. And part of Squish Chaos's bull case is that narrative will move a lot of investment and money towards ETH because it no longer has like the climate change issues that, say, Bitcoin faces, even though most of the Bitcoin miners are kind of transitioning to sustainable energy. And we've talked about the case of Bitcoin actually incentivizing sustainable energy in previous podcasts. So that's another narrative I think we haven't touched on, but should probably deserve a second mention in terms of narratives coming up once the merge happens.
So I think we should try to summarize this. Steven, do you want to take a shot at it?
Yeah, I could do a quick wrap up here. So why ETH? Like, why should you care? Like, especially if you're somebody who's new to the space. There's undeniably demand in the market to do things with blockchains that Bitcoin in its current state doesn't do, right? Namely, a lot of the smart contract applications that enable stuff like DeFi, NFTs, so on and so forth. So it's clear to me that we need an alternative to Bitcoin, right? Not necessarily a replacement for it, but a complement to it, right? So a lot of coins exist that are trying to fill that void, right? It's basically Bitcoin on an island and a lot of coins that try to do non-Bitcoin stuff. But in that sea of like a ton of coins, there's only one coin that does what ETH does, right? So ETH can kind of do all these other use cases, right? But it also has these incredible tokenomics, right? Which in the future, especially by design, are going to cause the number to go up. And you might say like, well, why can't Solana just implement the same tokenomics? Why can't Avalanche do the same tokenomics? And that's a good question. But the reason is because like ETH has inherent demand to use the network that none of these other protocols have, right? Like people are willing to pay hundreds of dollars to do transactions on ETH. They're only willing to pay like fractions of pennies to do stuff on Solana. So none of these other protocols can implement all of the stuff that ETH is implementing and get the same result, right? To top this off, like ETH, as we talked about, is rolling out layer 2 this year, which is going to basically enable millions of people to use ETH and to do so with the same cheap, fast transactions that they're getting on all of these other quote unquote ETH killers, right? So when you put all of this together, it's very difficult to see how anything is going to compete with ETH in the long run. And it's the reason why I tell everybody who's getting into the space to buy Bitcoin, to buy ETH, and then take a deep breath and go do some research and learn some stuff. And until you can kind of like, talk about why you own those two things and why other things have to be better and in which ways, then you don't have a lot of business buying anything else as an investment, right? If you want to gamble with a little bit, knock yourself out. But that's kind of like my brief synopsis on the why ETH bull take.
What about a crypto dick butt NFT? Should they put that a part of their initial portfolio as well?
I think so. Crypto dick butts are truly breathtaking pieces of art.
Grail.
Who wouldn't want one? Especially a little Spidey dick butt on there.
At least get an MFer. An MFer.
Oh, yeah. Don't show the MFers yet. I haven't bought any.
Shout out to us, by the way, because we pitched Cool Pets on our last episode, and they're up 50% since we dropped that.
Sorry, Steven went super responsible, so I felt this like urge to throw some super DJ comment in there. But we didn't appreciate Steven's wrap up there. But I think that was beautifully summarized, and we'll probably be back more with ETH Denver. But yeah, we did call Cool Pets, which is an NFT project that launched. It's got some play to earn game mechanics, that will hopefully drive it higher. What's the appreciation on it since the last time we mentioned it?
What was the
Eric?
price when we?
I think we shielded it at 1.2 ETH, and now it's at 2.
Really? It's like 2.5.
2.5.
Yeah.
Yeah,
It was as
pretty
high
nice.
as 2.9 today or yesterday.
We're dropping
Wow.
alfalfa left and right.
Wow.
Yep. Yeah, that was a great little summary, Stephen. It's perfect.
Thank you, Steven.
Yep.
Yes. I think we'll wrap there. Thanks for tuning in, guys. Much love. Let us know what you think. Let us know what you want more of. And hopefully we see some of you guys in East Denver. Until next week.
See you out there.
Peace.